Today, we're tackling, well, a pretty dense document.
An SEC filing. Specifically, the Form 10Q for BlackBerry Limited. That's ticker BB.
Right. For their second quarter of fiscal 26, which ended August 31st, 2025. Our mission today is pretty straightforward, though.
Yeah, translate this thing into plain English. Pull out the key bits.
Exactly. We're aiming to find the 5 most critical takeaways financially, operationally, so you get a clear picture of the company's performance, risks, and where they might be heading.
And these filings, they are the bedrock, right? But let's be honest, not exactly beaut reading.
Definitely not. So we've done the digging for you. Now, this quarter, what's the big story the filing tells is backing up this turnaround narrative we've been hearing about?
I'd say it strongly suggests a positive shift, yes. The headline, really, is what management's pointing to. Significant improvements, they say, in both financials and operations.
Okay.
And critically, a return to GAAP profitability for their ongoing business. That's kind of the milestone everyone's been watching for.
Okay, profit. Let's unpack that. That's the attention grabber. We need the hard numbers, the GAAP results. How does this quarter stack up against the same time last year, Q2 fiscal 2025?
Okay, looking year over year, you see clear progress on efficiency, even if the top line growth isn't, explosive.
Right.
So revenue came in at $129.6 million. That's up just a bit from $126.2 million last year.
Okay, slight increase.
But look at gross margin, GAAP basis, $96.6 million. That's a decent jump from $88.6 million. Better margin percentage then.
Definitely. And operating income, again, GAAP was $11.5 million. Compare that to just $2.2 million last year. Big improvement.
Wow, okay. And the bottom line?
Net income. This is the big swing. A profit of $13.3 million this quarter, last year. A net loss of $19.7 million.
Huge reversal. And that translates to earnings per share.
Yep. Basic and diluted EPS, GAAP is 0.02 cents per share. That's up from a loss of 0.03 cents per share.
Okay, so that net income swing, that has to be takeaway number one, right? The profitability flip.
It is. But we need to be a bit critical here. A swing of what? Over $33 million from loss to profit? Did sales suddenly explode? Or is something else going on? Like, is this an accounting story?
That's the crucial nuance, you're right. And it's really important for you, the listener, to get this. While operations did improve, that massive flip to profit, it was overwhelmingly because the losses from discontinued operations simply weren't there this year.
Oh, okay. Explain that.
Remember, they sold off the Cylance business. Last year, that unit booked a loss of $23.2 million in this quarter.
Right.
Now, with Cylance gone, those losses are off the books. So the continuing business, what's left, could finally show a profit on the bottom line.
So it's less about a sudden surge in the current business and more about, well, cleaning house.
Yeah.
Removing a big loss maker.
Precisely. It's a strategic success in shedding a liability more than sudden hypergrowth, a vital distinction, like you said.
Okay, understood. But even setting aside that big headline profit effect, you mentioned other signs of genuine efficiency gains.
Absolutely. Look at the gross margin percentage. It climbed from 70.2% last year to 74.5% this quarter. That suggests they're getting more value from each dollar of revenue, maybe a better product mix, better cost control within production.
Makes sense.
And maybe even more telling for operational health is adjusted EBITDA. Now, this number strips out things like depreciation, stock compensation, non-cash stuff.
Right, a cleaner look at operational earnings.
Exactly. And adjusted EBITDA jumped to $25.9 million. That's up significantly from $15.1 million last year. So that really shows the underlying continuing operations are getting better at generating earnings.
Okay, let's drill down into the business units then. BlackBerry breaks things down into 3 main segments now, right? QNX, Secure Communications, and Licensing.
That's right.
Let's start with QNX. That's their embedded software division, heavy in automotive. Supposedly the core of their future strategy. How's it doing?
It's doing well. Actually, better than expected this quarter. QNX revenue hit $63.1 million. That's up $8.4 million compared to last year. So takeaway number 2 is pretty clear. The QNX engine is accelerating.
Accelerating. And what's pushing that? More cars using their software.
Primarily, yeah. The filing points to strong growth in royalty revenue that's typically tied to units shipped, like cars, and also development seat revenue, which means more engineers are using their tools to build systems.
Interesting. You said better than expected.
Yeah, their own guidance for QNX this quarter was actually in the range of $55 million to $60 million. So hitting $63.1 million suggests things like royalty collection or new design wins might be coming in stronger or faster than they anticipated. Good sign for that core segment.
Okay, good news from QNX. Now let's look at the other big piece, Secure Communications, or SC. This includes things like their UEM platform for managing devices securely. What's the story there?
Well, here's where it gets a bit more complicated. SC revenue actually dropped.
Dropped. By how much?
It fell by $6.6 million compared to last year, landing at $59.9 million for the quarter.
Ouch. What caused the drop?
The filing says it was mainly decreases in revenue from SecuSmart, that's their ultra-secure voice tech, and also their traditional BlackBerry UEM product line.
Declining revenue isn't usually a great sign.
True. But this leads us straight into takeaway number 3, which is kind of a paradox. Exceptional operational cost control within that segment.
Okay, explain that paradox. Revenue down, but
But the segment's adjusted EBITDA, its operating profit, before certain costs actually increased by $1.8 million. It reached $9.7 million.
wait, revenue falls by over $6 million, but earnings go up by nearly $2 million. How does that work?
It points to really tight management. The filing explicitly mentions lower salaries and benefits expenses, likely headcount reduction or tighter controls.
Okay, cost cutting.
Yes, but also, crucially, a beneficial change in product mix. They specifically mention a higher gross margin contribution from SecuSmart software licenses.
Ah, so even if overall SecuSmart revenue dipped, maybe the type of revenue shifted to more profitable software licenses rather than, say, lower margin hardware or services.
Exactly. It suggests they're strategically focusing only on the highest margin deals, even if it means letting some lower margin revenue go. Profitability over sheer volume.
That's a risky game long term.
Yeah.
Maybe, shrinking the top line, but it certainly shows discipline right now.
Yeah.
Does that raise questions about the segment's future growth, though?
It absolutely does. You can't cut your way to growth forever. But in the short term, it demonstrates a clear focus on making that segment profitable no matter what.
Right. Okay, that makes sense. And quickly, the third segment, licensing.
Pretty steady, actually. Revenue was up slightly by $1.6 million to $6.6 million. And it continues to be very profitable. They reported a 77% adjusted gross margin there, mostly patent licensing, things like that.
Okay, so that intense cost control and secure communications, maybe that frees up focus and resources for these more strategic, longer-term bets. Which brings us to operational highlights.
I think that's exactly the idea. Focus the resources where they have a unique edge, usually in these high-barrier, highly certified markets.
And the filing called out a couple of specific wins.
Yeah, 2 stand out. First, on the QNX side, they launched something called QNX OS for Safety 8.
Okay, sounds important. What is it?
It's described as foundational safety-certified software. The idea is to make it easier and faster for developers, especially in automotive and medical, to build those complex systems where safety and security are absolutely critical, streamlining development.
Makes sense. Focus on their core strength in safety-critical systems. What was the second win?
That was on the secure communications side. They achieved a specific certification from the BSI.
BSI.
Yeah, the German Federal Office for Information Security. It's a pretty high bar. They became the first mobile device management, or MDM, vendor to get this BSI certification for deploying their BlackBerry UEM platform, specifically with Apple Indigo and Samsung Knox configurations.
Okay, lots of acronyms there. UEM is their management platform.
Right. Unified Endpoint Management secures phones, laptops, everything.
And BSI is the German security standard. Why is that specific certification such a big deal?
Because it unlocks doors, particularly with European governments and other organizations that demand that highest level of security assurance, it feeds directly into takeaway number 4, strategic alignment in critical systems.
So they're not trying to compete with everyone on basic device management anymore.
Doesn't seem like it. They're doubling down on the niche where they have this certified advantage. Think government, defense, critical infrastructure. The filing even mentions the SC division expects future benefits from government demand for on-premise solutions.
On-premise, meaning the client keeps all the data physically on their own servers.
Exactly. It's all about data sovereignty, keeping sensitive information completely within the client's control, which is a huge deal for governments. This BSI win fits perfectly with that niche strategy.
Okay, strategy seems clear. Focus, certifications, high security niches. So with this apparent cleanup profit, decent QNX growth, and cost control, what does this mean looking forward? Did they update their guidance for the full year?
They did. And that's our final takeaway, number 5. Raised guidance across the board. It signals management confidence.
Okay, give us the numbers. What are they projecting now for the full fiscal year 2026?
All right, for total revenue, they raised the range. now expecting $519 million to $541 million.
Upward revision. Good. What about earnings?
Adjusted EBITDA, they bumped that up quite a bit. The new range is $82 million to $101 million.
Significant jump there. And per share.
Non-GAAP earnings per share, the new expected range is $0.15 per share.
So across the board, revenue, operating profit, EPS, they're feeling more optimistic than they were just 1 quarter ago.
Seems that way. Driven, they say, by that stronger QNX performance, especially royalties and the disciplined cost management we talked about.
Okay, positive outlook. But we always need to check the balance sheet, too. Risks, liquidity. How's the cash situation?
Well, liquidity seems manageable, but it's worth watching. Cash equivalents, and investments ended the quarter at $363.5 million.
And how does that compare?
It's actually down about $46.8 million since the start of the fiscal year back in February. So they are burning some cash.
Okay, and debt.
Debt seems stable. They still have that $200 million principal amount of 3% convertible notes due out in 2029.
All right, now the filing mentioned a specific risk item pretty prominently. Something about the silent sale.
Ah, yes. The Arctic Wolf payment. This is important. When BlackBerry sold Silence to Arctic Wolf, part of the payment was deferred.
How much are we talking?
BlackBerry is still owed $38.1 million in cash from Arctic Wolf, and payment is delayed.
$38 million. That's not insignificant compared to their cash balance. How big a risk is this?
The company explicitly calls it out as a credit risk exposure in the 10Q. If Arctic Wolf can't pay, or payment is impaired somehow, that would hit BlackBerry's cash position or potentially require a write-down. It's a loose end from that Silence divestiture that needs tying up. Definitely something to watch.
Okay, one final point from the filing share activity. Did they buy back any stock?
They did. In the first half of this fiscal year, they repurchased 7.6 million of their own common shares.
Okay.
Spent about $30 million on that under what's called an NCIB program.
NCIB.
Normal course issuer bid, basically a standard share buyback authorization.
And what does that signal usually?
Typically, it suggests management believes the stock is undervalued. Buying back shares reduces the total number outstanding, which can help boost earnings per share figures. It shows confidence in future cash flow generation, enough to return some capital to shareholders this way. #tag outro.
All right, let's try and synthesize this. 5 key takeaways for you, the listener, from this BlackBerry 10Q. First, the headline profitability flip.
Right, but remember, largely driven by getting rid of the Silence losses. An accounting and strategic win there.
Okay. Second, the QNX acceleration. That core engine is beating expectations, driven by royalties.
Yeah. Third, that interesting paradox in secure communications. Strategic cost control boosting profits even as revenue dipped. Focus on high-margin niches.
Fourth, the strategic alignment, really doubling down on those critical system certifications like BSI to win specific high-security deals.
And finally, number 5, all this leads to raised guidance across the board, signaling management's confidence for the full year.
So overall, a narrative of stabilization, focus, and improved efficiency coming through pretty clearly from the filing.
I think so, which leads to maybe a provocative thought for you to consider.
Okay, let's hear it.
Given this very clear, quite narrow focus, now highly certified embedded systems with QNX, niche secure comms with SCI, they've shown they can be more efficient. The big question is, can future growth really come just from squeezing more royalties out of each car and landing these specialized government contracts? Or will managing risk still on the balance sheet, like that $38.1 million Arctic Wolf receivable, potentially constrain them?
Well,
could it limit their ability to expand strategically, maybe make acquisitions, or are they sort of locked into this efficient but perhaps limited niche?
That's a great question. Efficiency versus growth potential, constrained by legacy cleanup. A fascinating dilemma indeed. We'll definitely keep tracking it.
Absolutely.
Thank you for joining us on this deep dive into the BlackBerry filing. We hope this breakdown was useful.
Yeah, keep digging, keep asking questions. Thanks for listening, and we'll catch you on the next analysis.
Make sure to click like, share, and stay tuned for more deep dives.